Hello, everybody, and welcome to Extra Dividends. This is where we help people get started trading and show the way to consistent profitability using options. Today, in our Get Started Trading series, I'm going to provide a very brief explanation of why we do what it is that we do. First, exactly as the word option implies, you have choices. In trading, an option gives you the right to sell or buy something. But most people buy options. Buying a put option gives you the right to buy a stock at a certain price at a certain time. What you pay is called the premium. A very high percentage of those options close at the time of expiration worthless. And if you bought the option, somebody sold it to you, and they kept the premium, just like an insurance company. So when I understood this concept, it made sense to me that I would rather be the insurance company, the one selling the option and keeping the premium. Now, if you're confused by this and you're still interested, there are a ton of resources available. The purpose of this video is not to give you an in-depth understanding of trading options. I think that with all of the resources available, here's one that I would recommend: optionseducation.org. It has a great plenty to learn about options at that website. But the good news is you don't have to learn all about options to trade them successfully. And that's because at Extra Dividends, we help you every step of the way. Extra Dividends is a strategy that we use to profit consistently, like dividend-paying stocks do. Only we're looking for more profit, a lot more. We do this by putting ourselves in a position to purchase a stock at a substantial discount, usually 20 to 30% off the price that it's currently trading at. Only we don't actually buy the stock. We sell the put option at a premium, and we keep the premium at the time of expiration. We are the insurance company. If, in the rare instance, about 7 or 8% of the time, the stock is trading below the strike price at expiration, we end up buying the stock ourselves. And we got it at a really good price compared to the price that it was trading at earlier. So I'm going to show you some examples because it might be easier to see what I'm talking about as we take a look at the steps that are involved in selling a put option in Extra Dividends. So we're going to start by taking a look at Ford, because we start the process by finding a stock that we wouldn't mind owning. Now, if we look at Ford on the January 15 timeframe, we see it reach a high price of $26. And in February, shortly after it announced disappointing earnings, the price dropped. You see here on February 4, which is the day that we sold the 14 strike put for $33. Now that does expire on April 14, and so we're showing that by this line here. So what it means by selling the put is that if on April 14, Ford is trading above that, we get to keep the $33 because we provided insurance to whoever it was that bought the put, that the price of Ford would be above $14 on April 14th. Now you see, for that to happen, is the price has to drop 24% before it's lower than the strike price. And what are the chances of the stock dropping 24%? Well, we've seen with an increase in volatility that can easily happen, although as of the date of this recording on March 4, it still has a ways to go. The other point that I like to make when you're talking about selling put options is that if on this date we thought that Ford was a good investment and we would buy the stock at that price, what we're doing is giving ourselves insurance of 24% to be able to buy it at a much better price. So even if we take assignment, that means we're buying the stock at $14, not what it was back here at the time that we sold the put. Let's take a look at one other example. One of my favorites in our strategy here has been Camping World. We have sold this option a number of times, and somewhat the similar in some ways as Ford, in that the price was up to nearly $50 back in May of last year. But it's traded at a range, and so it had come off of a $46 price. And on January the 3rd, we sold the 31 strike put that expires on 3/18 for $65. The reason I chose this one to show you is because this strategy is called extra dividends, and here's the reason why. Look, on March 11th, Camping World Holdings will pay a $62.50 dividend. They paid a $50 dividend in December of this past year. So from the time that we sold this put in January to the time that it expires, March 10, we will have taken in $65. So that's why we call it extra dividends. Now, if on the expiration date, which is March 18, the stock is still trading lower than the $31 price, that means that we will be assigned the stock. But on January 3, we thought it was a good investment at, let's see, that was about $40. So here we would be assigned at $30. This would be after a 21% drop from entry to expiration. Now, of course, a lot of things have happened in the world, and a lot of things can happen that cause the stock to drop in price, but we have this 21% insulation built right in. So that's the real value of selling put options and extra dividends. So now I'm going to take a look with you at our weekend update in extra dividends for March 5, 2022. In this update, we're going to take a look at our new trades for the week. We're going to evaluate our closed trades and take a look at what's up for the week ahead. First of all, our new orders and extra dividends. We had 4 orders go out in our signals this past Monday, and to my surprise, all 4 of them got filled. I set the price so that the stock would have to move down substantially before they got filled. And of course, with the volatility, the stock did move down. So these are the 4 orders that we got filled in. Our track record for closed trades in extra dividends for the month of February was really good. We closed 6 trades, all of them profitably, for a total profit of $300. So you see, since our program launch date, we have closed 139 trades, 128 of them profitably, for a total winning percentage of just a little over 92%. So these are our current positions. We have about 15 positions. And again, given the current situation in the world, I really don't want to add more positions. So as a result of that, looking forward to the next week, I'm not going to be putting out any new signals. If you feel like you need to add positions to your portfolio because not everybody got in at the same time, I would look over some of these that are our current positions, because you can get into some of them at a better premium than what we originally got into them at. So take a look at that. If you have any questions, you can write to me at extradividends@gmail.com, and I'll work with you on that. But otherwise, it'll probably be the middle of next week before I get back to you all, and we'll see what's happening in the world of put options at that time. If this is the first time you're seeing this about extra dividends and you're interested, you can find information at our website, getstartedtrading.com. Getstartedtrading.com. Again, with your questions, write me at extradividends@gmail.com. Thank you for joining me, everybody. Remember, have fun and be careful. Bye for now.